Steps to be taken for optimizing your income tax liability this year. We are in the last quarter of the financial year 2022 to 2023. Now almost 2.5 months have left to complete your actions related to tax planning for the year. Here is a checklist for you to ensure that you don't face any problems on the tax front. You may not afford these points to be ignored. The tax department is neither lenient when it comes to deadlines, nor merciful when dealing with unpaid taxes. This checklist will not only ensure you don't end up with tax problems during the year, but also bring peace of mind and long-term security. Check your Annual Information Statement, AIS. The Annual Information Statement has details of all the financial transactions conducted by you during the financial year. It will have details of incomes including salary, professional income, rent, interest and capital gains, as well as expenses and investments including purchase of gold, mutual funds, stocks, bonds, etc. It also has details of the tax paid on your behalf by your employer and the TDS deducted by others. Be sure to check your AIS and verify if the details of your financial transactions are correct. Check the TDS details in Form 26AS. The Form 26AS is your tax credit statement and has details of the TDS deducted on your behalf and the tax collected at source, TCS, paid by you. Access your Form 26AS either through the Income Tax Department portal or through your net banking account and check if the TDS and TCS deductions are correctly mentioned in it. If for some reason some TDS or TCS has not been credited to you, you must contact the deductor immediately. A periodic check of the Form 26AS will ensure you are not running around at the time of tax filing. Do not ignore the foreign assets and earnings. Your tax compliance becomes a little complicated if you have foreign assets. All foreign bank accounts, financial interests, immovable property, accounts in which an individual has signing authority, and any other capital asset held by the individual outside India must be reported in the tax return, irrespective of the total income of the individual. Many taxpayers omit this, but this is not recommended. Not disclosing foreign assets can invite serious charges under the Black Money, Undisclosed Foreign Income and Assets, and Imposition of Tax Act, 2015. Even if a return for a previous year has been processed, cases can be opened even up to 16 years later, and penalties can be levied. Optimize the tax by utilizing all available tax deductions. There are various ways to optimize the tax liability for every taxpayer. However, tax returns indicate that many taxpayers don't fully use the deduction limits under Section 80. Either they are not aware of the tax rules or don't plan their investments well to avail the benefits. This leads to unnecessary outgo of tax on hard-earned income. One can plan investments to claim the full benefit of tax-saving options by up to 5 lakh rupees. You can see the other videos in my channel explaining various ways to optimize your tax liability. Harvest long-term capital gains from stocks and equity funds before 31st March. Stock markets have done very well after the COVID scare. If your stocks and equity funds have gained during the year, harvest up to 1 lakh rupees long-term capital gains to lower your future tax. Up to 1 lakh rupees long-term capital gains from stocks and equity-oriented funds are tax-free in a financial year. But you need to book profits before 31st March to pocket these. The same stocks and equity funds can be bought again, but their price of acquisition for tax computation will get reset at a higher level. Pay advance tax on interest, dividends and capital gains. A lot of taxpayers don't report their interest or dividend income because they are under the misconception that if tax has been deducted, no more tax is due. But tax deducted at source, TDS, is only 10%, while both interest and dividends are taxed at the normal rate applicable to the individual. Taxpayers in the higher income brackets need to pay more. If you have invested in bonds, NSCS or bank deposits, or have received dividends, make sure you pay the tax on these incomes by the due date. All these incomes will show up in your annual information statement, so there is just no way you can escape the liability. Also, keep in mind that unpaid tax attracts a penalty of 1% per month of delay. So, be wise, plan and optimize your tax liability. Thank you for watching. Do subscribe to my channel for regular updates.